11,067, roughly 11,000. Now looking at this is officially a downtrend. Okay, Alan, show them the first lower high. Okay, at the top, the lower high. Well, that's the top one. Yeah, right there. Okay, so you can see in that area there, we got a lower high here. Okay, it was the first lower high after price gave us the high up in the almost the 20,000 range. Okay, and now you can see that we've had a couple of lower lows. Prices made some higher lows. It started to consolidate, but since over the last couple of days, we actually fell below that 11,000 price range, which is where we're holding right now. We officially got a lower low. Now we bounced off a institutional sell block. Okay, we call them bid blocks. An institutional sell block is an area of accumulation where there's a whole bunch of institutional buying coming into play. So I'm not going to talk about these areas too much and point them out too much, but just understand that around the 11,000 area is where there is a lot of accumulation. There's also round numbers. Institutional buying is done at quarters and wholes. When you go in the store and you buy something, you don't see it listed for $1.37. You'll see it for $1.50 or $1.25 or $1 flat. I mean, we don't see things with weird numbers at 93 cents or 58 cents. Things are rounded, okay, to nickels and whole numbers. So this is the same when we're talking about banks that are going in and are buying and selling. So a good way to trade Bitcoin, our beloved Bitcoin, which is falling out of my favor for a trade or a hold, for instance, and I'll talk about that in a second. But if we're going to talk about how to trade Bitcoin and look for targets or areas to buy and re-engage or areas to watch to see kind of what happens, these are going to be your whole numbers. 11,000, 11,100, really more specifically 11,000 to 11,250, 11,500, 11,750, 12,000. Those quarters are going to be huge for Bitcoin. As price gets around those numbers, you will see how it starts to react. Okay. Again, I've gotten so many different techniques that I've used that the banks that we understand that the banks may use, from strategies to fundamentals to technicals. But when it comes to technical analysis and using the chart, these numbers, they help significantly. Same thing with the fulcrums. Now, Bitcoin, not only has it been consolidating for a while, but it's now officially in a downtrend. Okay. Now, a lot of you have been holding Bitcoin and you're only holding Bitcoin. A lot of you that come in that are new to the crypto space, that's all you know. You hold Bitcoin or you hold Ethereum or Bitcoin Cash. These coins, they have their use in your portfolio. Okay. But to just simply sit back and be a sitting duck and just hold Bitcoin is no longer scalable. And I'll talk about some of the things that are causing Bitcoin to kind of slow down, and you can see that it's slipping and sliding. One of the biggest things that we can attribute to it is perception is reality, as well as futures. The futures, the trading that has been institutional trading that has came into the market as it pertains to the futures market and trading Bitcoin has driven the speculation, the perception of where Bitcoin can go and what it's going to do now that there's people that have the ability to short Bitcoin, which, if you remind me, Alan, to bring up shorting Bitcoin and hedging, it's one of the topics here. It's very important, but that's another thing. I mean, having the ability to be able to hedge and short Bitcoin's big, especially if you have something in your portfolio as heavily concentrated as a lot of you have Bitcoin. So with Bitcoin, right now, we're at about 80% of all coins that are mined, or that are to be mined. And that means that there's 20% left to be mined. So there's a lot of coins left in circulation or that are currently circulating around. And now with more people, with last year, more people coming into the blockchain space, we've seen a lot of transactions be severely delayed. We've seen the fees go up 10 times from an average of $5 to sometimes $50. If you use BitPay, they're charging $50 to $75 no matter how much you send. These are some of the things we'll talk about in later videos to kind of help you guys avoid these things. But obviously, when we understand that the fees for Bitcoin going up and then things being slowed down and Bitcoin being as volatile as it is, Bitcoin is no longer scalable and acceptable or suitable as a medium of exchange. Imagine if I'm paying for something and it takes days or 3 hours for the transaction to process, and then Bitcoin has dropped 10% in its value. Well, the merchant is the one who's pretty much going to get the short end of the stick. And if I am the one sending the transaction that hasn't gone through yet, and it gets there and it happens to be less than what I'm supposed to pay, then because of maybe fees or the price of Bitcoin has dropped from the time you sent it to it getting there, this is something where it will affect me, and I'm the one that gets the short end of the stick. So Bitcoin being medium of exchange is no longer becoming as scalable. Now, there are other coins and currencies that are going to be a little easier as a medium of exchange. One that they're going to be using as a great example would be Ripple. You can see a lot of banking institutions, a lot of financial institutions are starting to implement Ripple. And Asia, a few banks in Asia recently stated that they were going to be implementing Ripple within their operations. And they, I believe, put billions into Ripple. And Ripple exploded and shot up to the $3 range. Now you can actually see that it dropped down and it's to bargain prices. We'll go to it in a second. So the one thing that we must understand is that if Bitcoin happens to be sideways and consolidating, even if it's going to give me some gains for the week or for a couple of days, if it's sideways, basing and ranging, any gains that it gave me, it's going to take them right back. Right now, it's down today. I showed you other things that are up, and they're up big. So you have to learn how to spot these hidden jewels and take advantage accordingly. You also have to learn how to diversify so that you don't have to be a sniper and have precision, accuracy when it comes to going in and looking for these things and finding the ones that are going to give you the kind of upside explosion or explosion to the upside to give you the good, I guess, return on your investment that you're looking for. Granted, there are coins that are get-rich-quick coins. If you put in the right amount and it explodes enough, then they do pay you enough to be able to change your life. But we're not looking for the fast buck here. The slow nickel is enough for me to be able to go ahead and take a living off of. So with that being said, Bitcoin being very expensive, Bitcoin taking a long time. Not only does it take a long time on the blockchain network, but it can take a long time to send inside and outside certain exchanges. If I'm sending something in an exchange and everyone's updating the server or the website like BitConnect the other day, then obviously I'm going to be stuck having to wait for my coins and be in limbo on blockchain. So there are other coins that you can use that are going to be better for sending, that are going to be cheaper, and they'll get there faster. One of the ones that I use in lieu of Bitcoin is Bitcoin Cash. I also use Litecoin. I like Litecoin better than Bitcoin Cash because Litecoin's cheaper and Litecoin gets there faster. But Bitcoin Cash is a good option for you to use to be able to send money to maybe your final destination, be it maybe the exchange like Kraken, Gemini, or God forbid, Coinbase or GDAX, to drop your coins in and to be able to liquidate into your bank account. All right. So one of the things that you must understand and remember is that Bitcoin, during times of high volume, you'll see that there is, very, very high costs for smaller transactions. And the main reason is because I'll give a great example or a great analogy. Bitcoin doesn't decipher between the value of one coin, a transaction being 1,000 Bitcoins or a millibit or a fraction of a Bitcoin. It's the same thing in terms of sending or receiving. Now, if I send $100, it's going to take the same processing power to send $100 as it would to send 100 million. A good analogy would be if I were to go to a cash register at, let's say, Best Buy, and I wanted to go ahead and buy something, and I used a $100 bill. The $100 bill is one bill going into the cash register, valued at $100. If I used $101 bills, that's the same $100 going into the cash register, but it's going to take 100 entries, 100 different bills going into that cash register, which ends up costing more. There's more, I guess, as far as processing that transaction. So it's very important that if you're going to be sending Bitcoin, you want to make sure that you're sending maybe larger sums. You may wait till things pile up a bit before you send it, or just choose to sell off the Bitcoin for something else, such as Bitcoin Cash or Ethereum. The third option would be Dash. So in my order, I would say Litecoin when you're sending it inside the blockchain ecosystem to reinvest, Bitcoin when you're trying to possibly unload it, or Ethereum when you're possibly trying to unload it into one of the exchanges to drop into your bank account or a safe haven like Tether. Okay, and which we'll talk about Tether in a second. So that's Bitcoin. I hope you got any questions before I move on. Let's type questions if you have any questions in here.